How we doing? Where we at? Good morning, everybody. Good morning, Detrice. Good morning, Alicia. Happy to see all these beautiful people here today. Oh, maybe YouTube stepped something up. I feel like the resolution is a little bit better on YouTube Studio. They changed some features. Well, looks like YouTube is leveling up. I expect nothing less, right? Owned by Google. One of the Magnificent Seven. Let's keep up in the ante. Good morning. Welcome. We got another pre-market prep session for you here today. This is where we go over the important news, notes, analysis, trade ideas necessary to making sure that you're consistently profitable out here in these market streets. Back in the green. Good day yesterday. Like I said before, small red day before, and then yesterday we got back in the green with our swings on the banks. Getting a kick in the butt and getting revitalized, re-energized, and going from hitting price target number one to price target number two for BAC. And a number of other bank stocks coming through as well. Citigroup hitting that major weekly price target number one. We had XLF coming through, hitting price targets, and GS testing weekly breakouts. So we have a lot of banks that came through, and the deposits, right? The deposits hit and making for a great week. So we'll see what else the market has for us. We got Powell speaking today. Powell spoke yesterday, getting a lot of chop. A lot of intraday volatility. Again, we went over that on Monday. It's important to lay the groundscape, the landscape, the foundation for your expectations for the week. If you expect it to be a big week with a lot of big movement and you get a bunch of chop, that's how you blow up your account, right? A lot of people think you blow up your account by the market tanking. You can 10x your account by the market tanking, right? You can tank your account by the market going up. It all depends on where you're positioned, right? So it's all about positioning. Expectations are key. And so far, we've played this really well this week in terms of our expectations and how we're executing. We're waiting for the breakouts to happen and we need, and otherwise, we're just letting the swings work. And we'll see if any new opportunities arise. But great work and execution thus far, and we're looking to keep the momentum going here. I actually need to pull our newsletter back up because I was doing some work with ChatGPT in the background, and my boy 4.0 was struggling, I guess, with all the windows that I had up. So pulling back up today's newsletter, let's dive in. But before we do, we're here for one reason and one reason only. It's to get 1% better each and every day. And it pays dividends every time, every single time it pays dividends to get 1% better daily. The compound return on that is unimaginable, right? It will keep you on the cutting edge of what's going on. It will keep you energized. It will keep you ready to execute and earning the day. That's the biggest thing. Every day that I wake up, it's an honor. I want to earn that day by doing something that day to get 1% better. So let's do that by being here. And whether you're in the chat live or watching the replay, throw that one, comment that one, signifying your intention. You're not here by accident. If you're here like, oh, I'm just going to hang in the background and see if I can get some, you're going to get hang in the background results, right? Nobody just hangs in the background and they're like, oh, I'm just going to not do much and not really apply myself and not really go out there and state my intention. Has anybody ever, gotten wealthy doing that? Has anybody ever accomplished their goals doing that? Has everybody ever earned their life partner doing that? I'm just going to lay in the background and hopefully eventually at some point they just see me even though I'm not there and, fall in love with me. Like, no, that doesn't work. It doesn't work anywhere. You got to go out, you got to state your intention no matter what you're doing in order to accomplish your goals and then actively pursue them, right? So if you want the results you're looking for, be active about it, right? Be active and they will actively pursue you as well. Because success pursues us here in the Stock Options Made Easy community. It pursues us because we pursue betterment of ourselves. It's a byproduct, right? So let's do this. Let's crush this fine hump day. And our top news today, kapow! Get ready for day 2 of testimony from Fed Chair Jerome Powell. Fresh off an appearance before the Senate Banking Committee, the central bank leader will sit before the House Financial Services Committee with many investors watching his every word on rates, the current environment, inclusive of upcoming policy. There's a lot to digest ahead of the big show, which will take place at 10 a.m. Eastern Standard Time. Now, recap, the Fed is definitely inching closer to cutting rates due to the considerable progress that has been made in taming inflation. However, policymakers still need to be reassured that inflation is moving sustainably toward their 2% goal, meaning a rate cut later this month is likely out of the cards. It might be unsurprising given a similar narrative the Fed has declared for much of the past year, but Wall Street Breakfast subscribers were early to flag this in the latest Seeking Alpha sentiment survey on Monday, assigning only a 1% chance to the FOMC cuts in July compared to the 8% seen last month. Quote, reducing policy restraint too late or too little could unduly weaken economic activity and employment, Powell declared, outlining the importance of carefully assessing the incoming data, their implications, and the balance of risks. As such, the majority of Wall Street breakfast subs, 45%, now forecast the first rate cut will happen in September, up from 37% seen in June. Rate cut chatter on Capitol Hill also helped the S&P 500 notch a fresh closing high, marking the index's 36th record of 2024. If you're sitting on the sidelines, I implore you to please not continue to do that. Even if you've got a long-term portfolio and that thing is doing well and it is recovering, you are leaving so much on the table, right? You are leaving so much on the table by not also taking advantage of this movement, trading more shorter-term things like options. It doesn't have to be day trades, right? When I say shorter term, you can get options that expire a year from now, but they will make exponentially higher gains using options than you will using just stock. And it takes honestly the same amount of brain power, the same amount of effort, right? If you went through a drive-through and you got a meal, you taking just the stock gains, like you getting a meal with a burger and fries and a drink, and you just take the fries and you just leave them with the burger and the drink. You're leaving the majority of the takeaway there, which is what everyone on the other side of the white picket fence is counting on for you. They're counting on you to not know all the tools available to you, not know how to use them, and honestly be too lazy to investigate. That's what a lot of the systematic inequality right now, right? Not back in the day, it was forced upon people, it was law, you couldn't do anything about it. Now, a lot of it is just based on the fact that people are conditioned to be lazy. They're conditioned to be lazy and they count on that. So that they're like, they got to come to me. They got to do what I want them to do, right? Because they have no freedom or ability to do otherwise. Actively pursue the freedom and ability to do otherwise by creating your own sources of economic vitality, by positioning yourself between whatever big money is going after and where we are now. If you do that, right, just like we talked about Kaizen with AI, you do that, people will always pay you. Why? Because what they want is on the other side of you. That's where you always want to be. And then they can't control you, right? No, I actually do what I want. I make my own hours. I work from where I want to work. Right. And I don't need to do whatever crusty thing you want me to do just because you're my only source of income, because you're not now. Right. So, not the only risk, the semi-annual update on monetary policy also contained the Fed's outlook on the broader economy after somewhat of a slowdown. They saw 206,000 jobs added in June, with the unemployment rate rising to 4.1%. The labor market is pretty much where it was in the pre-pandemic era regarding demand-supply dynamics, Powell added, but the FOMC would respond if it witnesses unexpected weakening. Quote, we've seen that the labor market has cooled really significantly across so many measures. It's not a source of broad inflationary pressures for the economy now. So, again, Powell talking about reducing policy restraint too late or too little could unduly weaken economic activity and employment. And then he said that they're carefully assessing the incoming data. It sounds like he wants as much as possible to be dovish, right? I mean, that's the most dovish, given the data that we've gotten, right? This is the most dovish that he could have been, especially given what he talked about the last time, he gave a testimony. So I think right now, if he continues this tone, then we look to see him, continue this dovish sentiment. But he talked about a lot of highlights that were bullish, right, and things that the market could grasp onto. So yeah, that's where we're at with it. And again, he could say one thing and the market whipsaws. So just understand that, be positioned accordingly, right? You can't control what he says, and you can't control how markets react, but you can control how you're positioned in markets, right? You don't always have to play SPY or play the major indexes QQQ. You can focus on individual names that are moving in spite of what Powell says or regardless of what Powell says, just like those banks, right? Those banks that have been getting it on and popping, regardless of whatever, Powell has to say. Now, Real estate, moving on to our next section, CRE risk. Amid concerns in the sector, Powell also told Congress that the commercial property industry may remain stressed for years. Quote, banks need to be honestly assessing what their risk is. They need to be assured that they have the capital and liquidity and the systems in place to manage this risk. Powell noted that Fed stress tests of U.S. banks this year concluded that large institutions can manage commercial real estate risk as well as most small banks. Regulators are still keeping a close eye on those with higher exposure to CRE, as higher for longer rates are expected to push more banks to build loan loss reserves through 2024. Yeah, I mean, commercial real estate is something that has been struggling, and it's been struggling for a bit, and it might continue to struggle. I've got an idea about that. I don't know if I should talk about it like publicly or just pursue it privately, but um, yeah, I feel like this is definitely something that still poses the biggest existential risk, and it bleeds over from China too because of Evergrande, right? You've heard me mention that 1,000 times over the course of the past 2 years. That big Evergrande real estate collapse in China has China reeling. It's had their economy reeling for a while, and bank failures are still persisting there, and we're trying to fight it off from bleeding over here. Um, and the Fed has tricks for that, and they showed it. They'll just go out and lend out more money to these banks, but commercial real estate still stands as a major risk here, because these small banks and these larger institutions just over leveraged. So we'll see how things end up developing, but as of right now, he said that the stress test that we had this year say that banks can manage it. So we actually talked about that probably maybe a month and a half ago about the stress testing to these commercial banks. So even if there is some issue in that sector, Powell's saying they can handle. We'll see. Only time will tell. Consumer news, insect food. Singapore has approved 16 species of insects, including crickets, silkworms, and western honeybee, as safe for human consumption amid efforts worldwide to promote an alternative and environmentally friendly source of protein. I will not be eating bugs. I eat weird stuff. I have a sensitive stomach, so it's a deadly combination, right? I keep ginger tea. If you guys aren't aware, you can get these ginger honey crystals off Amazon. It's like tea, it's just in a crystallized form off Amazon in these large industrial sized bags. I probably drink one a day. Why? Because I have the inkling to cook weird things and I taste weird things. I never eat bugs. That's where I draw the line. If you have, let me know in the chat. Hats off to you. I don't know if I'll ever cross that threshold, but I can't. I cannot. They are a good source of protein though. So like I feel like this has to happen at some point again, given like the world's population and the growth and all that. Like we've got to eat bugs. This has got to go down. I feel like especially because it maybe can help with greenhouse gas emissions just because farming is actually so bad for the environment when you look at commercial farming. But yeah, can't can't be me. Insects are widely eaten in many countries in Asia and Africa as well as Mexico. While the European Commission and Australia have approved a few species, the US does not officially recognize insects as food. Singapore has been a pioneer in the alternative protein space, being the first country to approve lab grown meat back in 2020. That will also eventually become a reality too. Right. You guys have heard me talk about that. It's not a fun reality, but it will be a reality. We will be eating lab grown meat and people will be flexing in 2100. If people are still here, they'll be flexing about how, it's going to be the world's wealthiest billionaire and you'll have someone over for dinner and they're eating real steak from a real cow. And that will be like the biggest flex of the century because no one will be eating real meat anymore. Global news, air defense. The U.S. and NATO allies have pledged to boost Ukraine's air defense capabilities. Dollar bills, y'all. Including sending equipment for 5 Patriot systems, which are manufactured by Raytheon, ticker RTX, and Lockheed Martin, ticker LMT. The U.S. and other countries, including Canada and the U.K., also plan to provide dozens of tactical air defense systems in the coming months. Ukraine will receive hundreds of additional interceptors over the next year. President Biden declared the commitment follows Russia's biggest missile attack on Ukraine in months, which killed 42 people and struck a children's hospital in Kiev. So we're still going strong when it comes to the war that's happening in Ukraine. I feel like we hit the nail on the head with that one. We said it was going to be a long, drawn out conflict, and it has been exactly that, a long and drawn out conflict. So we'll see how things continue to progress. But as of right now, those defense names just keep getting more and more money poured into them, right? Yeah. So In terms of today's markets, and I can check. Let's check those tickers out and see what they're looking like. Raytheon. We got Thinkorswim everything running a little slowly this morning. Yeah, Raytheon really trying to find a bottom here. I mean, we got above that 100.68 level, which has served as some tough resistance in the past. But the whole thing is that that whole zone from 106 to 108, 109, we've just rejected off of on the monthly in the past. So right there, I'm trying to, kind of find its footing here. Maybe if it can put in some type of weekly reversal candle. But as of right now, on higher time frames, not looking super interesting. Let's see on lower time frames. And I'm only going to check this one just because Thinkorswim is not liking that I'm streaming on YouTube and I have all these windows open. RTX might be interesting on the 4 hour. Hold over here. Yeah, over 101.04, over 101.04 can continue to push. Is it something that I'm like super antsy to get in? No. Yeah, I'm gonna leave it at that. Like it doesn't look horrible shorter term to continue to push as long as it's above 101.04 on that 4 hour, but it's not like I'm jonesing to hop in Raytheon here. I feel like it's important to make sure you manage your mental capital. I had a conversation about this yesterday about like different looks and different possible trades. There are a ton of different, an unlimited number of possible trades you could do, but paying paying special, making sure you mind your mental capital is big in this game, right? Just because something is there and is a potential opportunity, you have to look at how viable that opportunity is and also how much mental capital will cost you tracking that opportunity, right? If it takes you forever to track that opportunity and finally figure out whether or not you can execute on it, it's not worth it because you could have made five other trades that were much more in your face, right? So don't ever try and force trades or say, oh, I want to do this, just for the sake of doing it. You want to look at something and say, okay, is this where big money is going? Is the path of least resistance and it'll be relatively easy to execute on? If the answer is all yes, then focus on that. But where you put your attention in markets is key because you might be sitting there and wrestling with some stock. You're like, I did it. I finally, after all these weeks, turned a profit on this and I was determined to do it. And then someone else is like, yeah, well, I traded all these easy, big liquid names and they all paid, right? Like the banks this week. Like somebody somewhere was out here trying to like short Costco. They're like, finally, after 4 weeks, I've turned a profit on my Costco short. And it's like, bro, we just got paid on XLF, BAC, Citigroup, right? Goldman Sachs, like all of these just paid, and it took less than 2 weeks, and you're over here 4 weeks for 25% on this Costco short. It's like it's not worth it. In terms of today's markets in Asia, Japan, we're up 0.6%, Hong Kong down 0.3, China down 0.7, India down 0.5. The footy in London up 0.6, Paris up 0.8, Frankfurt up 0.7, the Dow flat. I think all of that is different now because last time I was looking, SPY was definitely up in comparison with everything else. All right, yeah, SPY looking green, up more than zero point 0.2 for sure. Today's economic calendar, Powell, we got Powell at 10 a.m., right? So keep that in mind. We can get some volatility there. What else is happening? Microsoft, Apple ditch OpenAI seats amid antitrust scrutiny. By seats, they mean like board seats. So they were supposed to have board seats on OpenAI's board. I guess they can't now because of antitrust issues. Jeff Bezos sells more Amazon shares worth 863 million. My boy has been selling shares left and right. Albemarle, ticker ALB, hits near 4-year low as lithium prices slide. That has been something that I feel like has been against what I thought would happen. If you guys remember a few challenges back, ALB was something that I highlighted with lithium really just being something that's in the forefront. And then now we've just had technological innovation that has just not had us relying on lithium as much, as well as this kind of shift toward, AI and the AI race. And that's kind of, taken away from those undertows, those factors that were really contributing to lithium prices soaring. So that just lets you know how, things can change, and technological innovations and jumps and all that can really, really affect things. And that's why it's important for everyone to understand and to be in an environment where you're up to date with what is happening real time and understanding that, and then shifting as the market shifts. Somebody says, Adam, what's a good stock to buy? What's a good stock to buy now might not be a good stock to have next week. Right, that is just where we are at with things. We are making these leaps each and every week, where whole businesses, whole business plans, whole business systems are being replaced. Right, so it's like you can't. What might be a great stock this week is a horrible one next week, and that's just the market that we're in. So again, you can't be lazy and expect to succeed here in this world that we're living in, because things are changing too fast for laziness to prevail. Changing too fast. Bill Gross, Tesla is acting more like a meme stock. Yeah, it's paying up. I said Tesla, it's got to prove itself to me, and Tesla did, right? And it's been paying us very nicely here over the course of the past few sessions, running up, busting that weekly and monthly downtrend, and doing so with volume. So congratulations and great work on Tesla came through. Everybody was, is Tesla dead and is it the worst stock to own and da da da. Dude, what? What? Right? I'm not a Tesla fan, but I guess I had to kind of function as one over the course of the past few months, because everybody's like, what are we going to do? This company's dying. No, it's not, man. No, it is absolutely not. Elon has tapped into way too much for Tesla to be a useless company at any point, right? No matter how much controversy he's involved in or embroiled in, their full self-driving at this point is an AI gold mine, right? And there have been whispers of them starting to license it out to names like Buick. That becomes a thing, and they start licensing out that full self-driving, right? Helping using that to help train their AI models, and they already have Optimus, right? So they have humanoid robots that they build, right? The Optimus bots. And then they have tons and tons and tons of data of their AI using full self-driving, navigating the human world. So they've got humanized robots, they've got like full self-driving, right? And they've got a ton of data with which to train AI on from the full self-driving. And then they've got a ton of data from which to train AI on with Twitter. So you've got all of the raw elements that you need to continue being one of the most influential companies in the next century. And people are like, oh, this company's dead. Do you not see the building blocks they have at their disposal? Right? With AI, all you need a ton of training data, right? Human-based data, and then a ton of data of AI actually out there navigating things, and then just vessels with which to deploy it. And they have all of them. Vehicles, humanoid robots, right? An endless stream of training data and data that they can license out in terms of the full self-driving. Like the elements are there. It's just you can go through a crappy few months, right? You can go through a crappy few months, but at the end of the day, don't pretend like Tesla ain't Tesla. Fisker recalls Ocean Electric SUVs. Hawaiian Electric, ticker HE, soars amid reports of fire settlement. Chipotle, ticker CMG, Jack Hartung plans to retire next year. Modi, Putin set goal to reach $100 billion in bilateral trade by 2030. I believe that's Modi from India. Yeah, India. India's prime minister. So Russia deepening ties with India. India has, over the past few years really allied itself more closely with Russia and China, and they're realizing that it's a way to kind of expedite their growth. Big tech, American big tech swallows everything up. So India has played their tech companies like China has, and basically made them off limits to the U.S. They're trying to keep them out. And they're also making deals with them in order to do things like get cheap oil and all that stuff. And it's a dog eat dog world, and every country is worried about what pertains to them. And India is like a classic example of like, I don't care what you're doing over here, just give me cheap oil, right? I don't want to be involved in any of your stuff or your beef. I'm just here for me. And that's where India is at. And I can't say that I fault them, right? I don't agree, with, oh, I'm gonna ally with China or ally with Russia. But like if they allied with us, what would we want them to do? Push our agenda, right? Everybody's out here trying to push their own agenda. So I can't fault them for it. Report Oracle's potential server deal with XAI falls apart. Fed considers tweaking GSIB surcharge for biggest U.S. banks. And that'll wrap us up here on this fine Wednesday morning, July 10th, 2024. It's been a great week. It's been a hot one, right? Hot in the accounts with the banks paying us yesterday, and hot outside with this craziness over 90-degree weather. I'm still scheduled to play pickleball tonight, so y'all pray for me because it's supposed to be 94, and I don't think I've actually stepped foot outside of my house in 3 days since I got back from the beach. I've been full blackout curtains, AC blasting, and yeah. So if I get out on those courts and y'all don't see me in the morning, you know what happened. But everybody, let's have a great day. Let's continue to execute. We've got some looks that we've got our eyes on, right? Tesla paying us on the long swings. Banks coming through yesterday, taking some nice profit. We've got some names we've got our eyes on too as well to execute on. So let's make it a great day. And I'll see you all back here tomorrow morning, hopefully, for our next pre-market prep session. Have a good one.